I just spent 3 weeks analyzing 20 years of actual data comparing real estate and stock market returns, and I need to tell you, everything you've been told about which investment is better is missing the most important part of the story. One of these investments returned 10.5% annually, while the other only returned 5.5%. But here's the twist. The lower returning investment actually made people wealthier. Stay with me, because by the end of this video, you'll know exactly which investment strategy is right for your situation, and I'm going to give you the specific numbers and action steps you can use today. Let's start with the stock market numbers, because they're straightforward. From January 2004 to January 2024, the S&P 500 delivered an average annual return of approximately 10.5%, including dividends. If you invested $100,000 in a simple index fund like Vanguard's VOO in 2004 and never touched it, you'd have around $730,000 today. That's life-changing money. And here's the beautiful part. It required virtually zero effort. No phone calls about broken water heaters at midnight, no property taxes, no tenant drama, just set it and forget it. But let's talk about real estate now, because this is where it gets interesting. National home prices appreciated at roughly 5.5% annually over the same 20-year period. On the surface, that looks worse than stocks, right? But here's what changes everything. Leverage. When you buy stocks, you typically use your own money. When you buy real estate, you typically put down just 20% and the bank finances the rest. Let me show you the math with a real example. In 2004, let's say you bought a $250,000 rental property with $50,000 down and financed $200,000 at 6% interest. Fast forward to 2024, and that property is now worth approximately $380,000 based on the 5.5% appreciation rate. Your equity went from $50,000 to $180,000 after paying down the mortgage, plus you collected roughly $330,000 in rent over 20 years. After expenses like property tax, insurance, maintenance, and mortgage payments, you might have netted $80,000 in cash flow. Your total gain, around $210,000 on a $50,000 investment, which is an effective return of over 420% or about 14% annually. But wait, there's more. Real estate gives you massive tax advantages that stocks simply can't match. You can deduct mortgage interest, property taxes, insurance, repairs, and even depreciation. That depreciation deduction alone can save you thousands in taxes every year, even while your property appreciates in value. It's one of the best legal tax shelters available to regular people. Now, the stock market has tax advantages too, especially if you invest through retirement accounts like a 401k or IRA. In a Roth IRA, your investments grow completely tax-free forever. You can invest in low-cost index funds like Fidelity's Zero Total Market Index Fund, which has literally zero fees, and every penny of growth is yours to keep. So which actually wins? Here's my honest answer. It depends on you. If you're someone who has a full-time job, doesn't want to deal with tenants, and values simplicity, the stock market is probably your best bet. You can automate your investments, contribute consistently through dollar-cost averaging, and historically, you'll do extremely well. The S&P 500 has never lost money over any 20-year period in history. But if you're handy, enjoy real estate, have time to manage properties or money to hire property managers, and want to use leverage to amplify returns, real estate can build wealth faster, especially in high-growth markets. Some investors who bought rental properties in cities like Austin, Nashville, or Boise over the past 20 years saw returns exceeding 20% annually. Here's my recommendation. Why choose just one? The wealthiest people I've studied do both. They max out their retirement accounts with index funds for hands-off growth, then use real estate for leveraged returns and tax benefits. You could start by investing 15% of your income in a low-cost index fund, then save separately for a rental property down payment. If you're not ready for physical real estate, consider REITs like Realty Income, which pays monthly dividends, or platforms like Fundrise that let you invest in real estate with as little as $500. These give you real estate exposure without the headaches of being a landlord. Here's your action plan. First, make sure you're investing at least enough in your 401k to get your full employer match. That's free money with a 100% return. Second, open a Roth IRA and set up automatic monthly investments into a total market index fund. Third, if real estate interests you, start researching markets and running numbers on potential rental properties. Use the 1% RRE UL as a starting point. Monthly rent should be at least 1% of the purchase price. The bottom line is this. Both real estate and stocks have created millions of millionaires. The best investment is the one you'll actually stick with for 20 years. Consistency beats perfection every single time. So pick your strategy, start today, and let compound growth do the heavy lifting. Your future self will thank you.